Welcome. We are all familiar with wedge patterns. In this video, I am going to be revealing a way to look at wedge patterns that you have never seen before, unless you have been following me for a while. And what you're about to learn applies in all time frames and for all trading instruments. Let's begin by taking a look at price. In this example, we will see that price sometimes does not reveal the correct formation or the underlying market sentiment. If we take a look at point 1, 2, 3, 4, 5, 6, and 7, we really can see how they are connected. They all seem to be at random places and don't have any direct connection as far as I can personally see, and I believe you can also agree. So there's a lot of information that is missing in here when we look at price. Now remember, most wedge formations that you've learned about over the years is based on price. And so clearly there's no wedge formation based on price that connects all of these points. We'll agree on that until you bring in the RSI, and now you can see it. Now suddenly all the 7 points that looked very random are now showing up on this top side resistance line perfectly. And this is the value of adding RSI to your wedge formation practice. We can see here the same thing. Nice trend line lows. So clearly, if we can clear this top side line given this wedge formation, then it means that right now this is giving us a breakout, or what I call a Swedge breakout. Links are gonna be in the description. Right there is your buy entry, which by the way also matches up nicely with this wedge formation from price right here. And by the way, let me give you a pro tip. You can also use the MACD whenever you see a wedge to identify swing trade entries and exits, but that is a subject for another day, how to use the MACD for swing trading using the wedge formations. And remember, the longer the wedge, the more it is gonna have power packed in it. So in this example, we see a breakout right there, the RSI moving above that range, which in this case the wedge is almost 3.5 months in the making. So that breakout was worth taking with the expectation that there was energy building prices to go higher. After that entry 2 weeks later, we got a very good swing trade to the upside. By the way, another tip, see whether you can extend your RSI lines, because they are gonna give you other points of information which can aid you in your decision making. For example, we come and tag the line right there for this re-entry. We tag the line again for this re-entry here. We tag the line again here for this re-entry. All of those points gave us nice indication of where momentum was gonna be trending towards. Again, it is good practice to extend your trend lines. Now notice we get the exact opposite here, because now the previous lows line of the wedge on the RSI gave us these sell signals here for a swing trade, or we can even say areas to take profits right there. Now here's a question for you, and this is the value of the RSI. If you know how to read it, what would happen if the RSI would break below the previous topside RSI line? What would happen? Well, let's see. Now, 1 day later, take a look at what is happening here. We seem to be breaking below the line extension right there, which would mean this is a sell signal or a signal to go short if it stays below the blue line. Let's see what happened. Since that break, prices are generally down. Now consider this wedge formation on this example right here. We seem to be showing a wedge breakout formation right there, just as many traders might be questioning this, suspecting a downward move and rejection around that 50-day moving average, just as there was rejection around the 50-day moving average here. But if we go with a wedge breakout, we can suspect that this breakout could lead to prices actually going higher. Let's take a look at what happened next. Prices went higher after that. Some wedge formations are not so easy to identify. As the market went sideways here, you'll notice that there was a short wedge here that was being formed, which led to a breakdown of the wedge and prices drifting lower for a swing trade downwards. Now we're going to take that topside line and extend it as such. And we also have this wedge formation here. And what this is telling us from a wedge breakout standpoint, that this movement here is a breakout. Chances are prices could be going to new highs if that breakout can hold. Let's see what happened afterwards. The market went on to record all-time highs. Fast forward 2 weeks later, and now there's a new wedge being formed right there. Top side resistance line, bottom side support. Looks like a bearish wedge and looks like we are breaking. Let's see what happened after that. After this wedge break, the market proceeded to go down. Couple of weeks later, we have another wedge. Keep in mind, this wedge was forming for almost 4.5 months, and looks like we have another fresh breakout right there. Given that breakout, we can assume that what the market is trying to tell us is that there are good odds that the next meaningful direction is for the market to move higher. The very next day, we have a follow through, as you can see here, with a strong up day, confirming that Swedge breakout, and then the following happened. The market would go on to stage a bullish swing trade to the upside. I know that this is not a fair example, but this is Bitcoin weekly going back to 2015, and we can see now that there was a wedge breakout right here as of that July 2015. And like I said, I know it's not a fair example, but this is the only way we can learn, by studying what worked in the past. Now, if we fast forward, I want to show you something really critical, and it is how price can be deceiving. Why? Because based on this Swedge breakout here, your entry was here, but you can see what happened. Yes, you got a little bit of a move higher, but ultimately you get stopped out right here. And this is the key. You get stopped out during this move down, but notice the RSI never broke down. This is the key, and this is why I believe following the RSI is more important, because it gives you better signals. So if we assume that you knew that Bitcoin was going to be a big moving instrument in 2015 during this breakout here, and let's say if you are strict in terms of your stop loss, you would have been stopped out here, and so you would have missed the eventual run. But if you take a look at what you are being told by the RSI, it held right here precisely where the entry was, meaning that the RSI was telling you from a sentiment standpoint that nothing was broken, everything was fine. Another reason why I don't trust price as much. Of course, the rest is history, but let's focus on what we are talking about here. The market seems to be very aware of the Swedge breakout, hence this double bottom support before giving the last lows here before the eventual gigantic move. In late 2020, Bitcoin had another massive run-up, and we can see it began here with this Swedge breakout on the weekly chart. By the way, if you take a look at the current setup, you can draw a trend line on the top side, and we can also draw another wedge line on the bottom side, something like that, which means a breakout would be exactly what the bulls want to see out of that wedge, and a breakdown would be exactly what the bears want to see for a strong move down. It is a concept that needs some consideration and study. The more obvious the RSI wedge, aka Swedge, the better. With more experience and study, you come to learn that the RSI reveals things that price surely can't. I would like to state that it was a pleasure connecting today, and go forth, rejoice in the power and the peace of the one supreme creator. Until we meet again. Bye.